The Pullback. 3 Catalysts. Catalyst 1. The Cursor acquisition. Within days of the IPO, SpaceX announced a $60 billion all-stock acquisition of Cursor, an AI coding tool. Cursor has approximately 7 million developer users and is positioned as SpaceX's response to the acknowledged failure of its existing XAI software products. For anyone who bought shares on the open market, an all-stock deal means immediate dilution. The market reacted negatively. You just raised $75 billion, and now you are spending $60 billion of stock to buy a product that may or may not fix the problems in the AI segment you already own. Catalyst 2. The $20 billion bond offering. Bloomberg reported that simultaneously with the Cursor deal, SpaceX was planning a $20 billion bond offering. A company that raised $75 billion, announced a $60 billion acquisition in stock, and was borrowing another $20 billion raised an obvious question for markets. How much capital does this business actually need? SpaceX lost $4.9 billion in full year 2025 and $4.28 billion in Q1 2026 alone. Its capital expenditures in Q1 2026 totaled $10.1 billion, more than double the $4.1 billion in the same period the prior year. The majority went toward artificial intelligence infrastructure. The pattern, raise, spend, raise again, is consistent with a company building infrastructure at a scale that current revenues cannot sustain. Catalyst 3. Options trading begins. June 17 was the first day SPCX options started trading. This was a structural turning point. Before options existed, there was no practical mechanism for short sellers to bet against the stock. Once put options became available, institutional investors had a tool to hedge or position short. The selling pressure that followed was, in part, a function of the market finding its equilibrium after weeks of one-directional buying.